Hello everyone, welcome. Thank you for joining. This is Yanko speaking. I'm glad to see you all here, and I hope the week started well for you. It's been a little bit crazy in the last few days, especially with the euro dollar, and I will shortly start with a quick market review before talking about today's trading strategy. I hope you can all hear me, and I'll just share the screen now, so I hope you can all see the screen as well. If there's any problem hearing me well or seeing the screen well, just let me know, please. And yeah, of course, as always, you are more than welcome to write down your questions during this class, this webinar. So let us start with a quick market review, and I'll start with the euro dollar, which is obviously very interesting, I guess, at least for some of you. And we talked about it a little bit last week, I think, and I mentioned, I think I mentioned the descending channel here. Okay, so you can see the euro dollar is confined within a descending channel. You can see here all the areas around here and around here where there was a resistance or support, and of course and this is how the channel was defined at its bottom. And of course, the most interesting part is where we are at now, which is here around 121.80 to 60, more or less. This whole area here. So you can see that on Friday, okay, last Thursday and Friday, these two candles reacted pretty well to the descending channel, and if we take a look at the 4-hour chart, okay, we can see that it, it tried to penetrate it several times on the 4-hour candles. Eventually, on the daily candles, you can see that the euro dollar closed above this channel, okay, above the lower line of the channel, but it remains to see today how it will react. You can see here that it on the 4-hour chart, okay, on the on this candle here, it really it's battling around the channel here. And you can see how during the last 3 or 4 hours this line has been given strong support, along with some Fibonacci level. I remind you the 76.4 or the 78.6. So something around here with this level, or if you stretch the Fibonacci level to Friday's high, you can see it's really sitting exactly on the 76.4. But again, even without the Fibonacci, you can see how the channel is giving very strong support. And on Friday, you can see this candle here, just as it reached the bottom of Thursday. Okay, so there was strong price action here with an hourly candle of about 80 pips, and the gap here from yesterday night also it gapped higher, and now it remains to see whether the euro dollar will continue its voyage downwards, or will find support and start moving towards the upper part of the channel, or at least somewhere in the middle, I don't know, somewhere around 124, which is a round number and a very strong support or resistance level, as you can see around here. Okay, 124. So now if we look at the euro dollar, okay, we can see that it's again dropping down, reaching some strong support Okay, and we have this whole area to serve as very, very strong support from last week, from Thursday and Friday. And I will talk about this area and about this pattern, okay, of low, lower low, and the same low, okay, or double bottom, and on the other side double tops. I will talk about it today as part of our trading strategy. It's a very interesting pattern. It involves some divergences, and this will be the main topic for today. So the euro dollar, again, it's I'm not a prophet. I don't think anyone is. Basically, the general direction is still down, but with this descending channel and the strong support here, just like I said, we still have to see whether the daily candle closes below it or manages again to close above it. Now, if you take a look at the weekly chart of the euro dollar, you can see this spinning candle, okay, the spinning top here, and usually it's a strong reversal candle, especially when it's on the top, but also at the bottom. Okay, you can see reversal candles, for example, here. You can see it around here. Okay, when we have a small body and long candles on both sides of the body, it usually suggests hesitation. You can see some of them here. Okay, hesitation and potential reversal. Okay, this is on the hourly chart, and by the way, if we add the stochastic, you can see, well, on the 5 there isn't much to see. No, I can actually, you know what, it looks like the potential divergence is slowly disappearing. Still, if it's only if, okay, it's a matter of if the weekly candle manages to go up, we may see bullish divergence. But again, if just like you can see here, if the price keeps going down, there will be no divergence, and obviously even if there is, it doesn't help us because the price is going down. So again, the most important thing for the euro dollar, and for those of you who trade the euro dollar, is to pay attention to this level here. Again, I stretched I put the channel from these lows, okay, from this low here of more or less mid-January until the beginning of June or the end of May. And then you see the upper part, which is less relevant right now. You can see touching a few highs or a few lows before. Okay, so again, we'll have to see, and I guess by tomorrow or by Wednesday, we will know already what happened with this line, and you can follow it today. This is the euro dollar. The pound. Let's take a look at the pound dollar. Where is it? Here. The pound dollar shows a little bit more strength. As you can see, it is still supported on the weekly chart. Oh, sorry, that's not what I meant to do. Here. Okay, so you can see that the pound dollar is still supported on the weekly chart here. Okay, all over this line here. On the weekly chart, it looks better. Sorry. On the weekly chart, it looks better. Okay, you can see this candle here. You can see this reaction here. Okay, and on the daily chart, you can see that there is some support around. Well, it didn't even reach the support here. Okay, but there's strong support around this area. Okay, so you can see this whole area here as very strong support. It didn't reach it in the last few days, but if it goes down again, we may see some strong battles here before maybe breaking down the ascending trend line. Maybe not. We'll see. On the shorter time frame, you can see here the 4-hour chart, how it, for some reason here, it does touch the trend line. Okay, for the pound dollar now, what it remains, if the currency pair is about to continue upwards, it has to break this strong resistance. Okay, so again, pay attention to these price action levels. Okay, strong resistance around 155.80 more or less. Okay, you can see this reversal candle here, another hesitation candle, and it dropped again from this level about 60 pips. Okay, so just be aware, and you can see here that on the hourly chart it looks like it broke and closed above this level, but eventually on the 4-hour chart all it left behind is a wick, okay, a candle wick. So again, with longer support and resistance levels, especially when you see candle wicks before, okay, if you see candle wicks like here, okay, you see many candle wicks, be aware of these candle wicks, because if you go to the hourly chart, okay, and you say, okay, once I have a candle close above the resistance level, I open a long position, okay? But you have to be aware that on the hourly chart, these, sometimes candles may close above it, okay? While on the 4-hour chart, all it leaves behind is wicks, okay? So just be aware of these support and resistance levels, and see whether, sometimes just be patient, see whether you have to wait for the 4-hour chart, or whether a 1-hour candle is enough. And even if you entered long for some reason on the hourly chart, you said, okay, maybe it's going up, you entered long here and you see it close down and retest this line, just, this gives you an opportunity to close your trade with a small loss, okay? Or if you decide still it's not a very big movement here, so if you see the price closes below the resistance line, just and you open long because it closed above, just reconsider your trade. Don't wait for it to go too long, too far from your trade. Okay. So this is the pound dollar. The Aussie dollar, let me show you something. Okay, the Aussie dollar here, let's see if it's here. Let me just take a look. For some reason I remember, oh yeah, I know what yeah, okay. Let me just show you something here. Okay, it's there's the strong trend line here. Okay, and the strong trend line here was broken and breached. Again, you see here this gap and around and broken again. But you can see that the Aussie is playing around this trend line. Now, just a sec. Okay, you can see, again, not all the time, but you can see sometimes that the price still reacts to this trend line, okay, here and there. You don't have to use it all the time. Obviously, it goes up and down and above it, but just if you want to be aware of this trend line, and you can see that although it broke down, eventually it closed above it, and now this trend line may give some support again for the Aussie dollar. Maybe to continue upwards, but still it has other trend lines and other resistance and support lines to cross before it continues upwards, if at all. Okay, so you can see here this there's this trend line here. You can see here a crossing of a descending and an ascending trend line. So the price is pretty much confined around here, around this area, And again, I cannot tell you if there's a clear direction, although the general feeling, or what I feel, is that there is more potential for for the currency pair to go down with this already overbought zone on the weekly chart and this reversal candle. But it may take some time, and we may see some more support eventually here. Okay, so you see here the price is still very much confined around just below this support area. Again, it's on the weekly chart, it looks better. Okay, you see here support, resistance, and now it's really confined, and we have to wait and see where the price eventually goes. Let me show you one or two more things before we start. Let's see the S&P I wanted to show you. Okay. The S&P, again, as you can see in the last few weeks, it's moving up and down and up and down, not very clear. But okay, it still has some potential confinement or sideways movement. And here, again, just like with the Aussie dollar, okay, it broke this, it broke a trend line. Okay, it broke, you see here, this candle is supported on the trend line, eventually it broke it, but then again on Friday it went above it. And you can see here, okay, we have, first of all, we have this support level around here. And one more thing I noticed on Friday was that it was supported exactly on the 76.4 Fibonacci level. I mentioned it last week. I told you it's a very strong support or resistance area. Okay. And you know what? I'll show you how strong it is if we just go for a minute again to the euro dollar and just see here. Okay, just take a look here even. Okay, it went down, it went up, stopped on the 76.4 and dropped very sharply. Okay. Now here there were, I guess, a few more reasons for the drop, because it also reached this trend line exactly here. Okay, so you can see that this is we have several resistances here from the Fibonacci, from the trend line, very strong resistance, and eventually you see how the price kept or continued going down all the way from here, especially that we're aware of the fact that this is that the euro dollar is still generally on a strong downtrend. Okay, last but not least is the dollar yen. I was asked about the yens last week, and I mentioned the dollar yen and the Fibonacci levels. So and indeed it reacted very sharply to these levels. It was last week. I don't remember if it was Tuesday or Friday. Okay, so I stretched to this Fibonacci level here, and I was asked about the dollar yen, and I mentioned, I think it was here on, I don't remember if it was, let's see, it's Friday, Thursday, Wednesday, yeah. On Wednesday, just before we finished the last webinar of the week, and I said it was around here, about 11, on the hourly chart. Okay, so it was about 11, the webinar, we were about here, yeah, somewhere between 11 and 12, and I mentioned that the dollar yen may find resistance. I think I said that, find resistance around the 38.2, but it may very well find support around the 50 Fibonacci level. Okay, I don't know if the one who asked me that is here today with us, but you can see here how the Fibonacci level, the 50 Fibonacci level, gave us strong, very strong support, and it went all the way up to the 23.6 Fibonacci level, okay, which is about, well, not before testing again the 38.2. Eventually, it's almost about 80 pips. So again, you need to be aware of these Fibonacci levels. They can be very very strong, especially on long-term charts like the daily chart, the 4-hour chart. So you can see, even if you trade the hourly chart, okay, even if you trade the 1-hour chart, you should still be aware of longer time frame resistance and support levels, such as Fibonacci levels. Okay. So this is what I wanted to show you about the market for now. We'll keep following I don't know, the euro dollar or other currency pairs during the session and see if there's any special movement. And what I want to do today is talk to you about trading method which is quite simple. It requires your attention, your patience, and but it's composed of price action on double tops and double bottoms, especially with divergences, not only, but and we'll talk about reversals and continuations. Okay, so this method works well both for price continuation or trend continuation and for trend or price reversal. And the reason I'm teaching it today is, again, because the euro dollar gave this pattern, and I noticed this pattern a long time ago, and every time I see it, I see that it works pretty well. Okay, obviously not 100% of the time, but it really works well. And obviously, when it's reversal, it bears more risk with it, especially when the trend is strong. But if you take a trend continuation, obviously you have more chances because you go with the trend. And still, both cases are pretty simple and pretty strong. So let's see the pattern I'm talking about. And again, what the pattern for reversal, now I'll start with reversal because that's what I saw on Friday. The pattern for reversal talks about a trend that is weakening. Okay, let's just open a chart, whatever, and okay, the price, the pattern works this way. We have a downtrend and then some retracement, and the trend continues with a lower low, okay, and then it gives another retracement, maybe to the previous low, maybe sometimes a bit higher, it doesn't matter. And then instead of giving us another lower low, what we have is a double bottom, more or less. Okay, now when I say more or less, I mean that you may you may see a wick of some sort. Okay, you may see you may see a wick, or you may see some maybe a little bit lower candle, but generally you have a double bottom. Okay, and then you may expect, again, not always, but there may be an uptrend or a reversal of the previous downtrend. Usually this pattern, okay, lower low and then a double bottom with a reversal, is followed, or you can see it with a divergence on the MACD, stochastic, RSI. usually a second divergence, and this is what makes the pattern more makes the pattern stronger. So if we have the MACD, and you can see here that we have lower lows, on the MACD we'll have higher lows, or any other indicator, higher lows once and another higher low. So we have the first divergence around here. Okay, we have first divergence here, and then the second divergence, sorry, and the second divergence is around here. Okay, in this case a bullish divergence for a bullish reversal. And if we look at the euro dollar, okay, let's add the stochastic, and let's add a few oscillators. Let's add the stochastic and the MACD, and you know what, even the RSI. Let's see how the RSI reacted. Let's add a faster RSI, like 8. Let's see, or you know what, just a sec. I'll just take the, okay, let's see. Okay, I used to work with RSI a few years ago, but I stopped, and I prefer the stochastic, the MACD. They for me, they give added value to the RSI. So you can see here we have one lower low, and then we have the double bottom here. Okay, and on the stochastic we can see here already the divergence. Okay, and well, here, because the stochastic is pretty fast, and the shape of the double bottom wasn't very a classic double bottom shape, like a W shape, then the stochastic doesn't give us a clear divergence too, but we'll see other examples. And the MACD, so you can see here the general divergence. Here there isn't a clear divergence. Again, I'm teaching, like I said, I'm teaching this method because I saw more or less this pattern on Friday. But obviously, as you can see, this specific pattern on the euro dollar is not the classic example, and of course I'll show you other examples. But this, what I saw on Friday with the strong reaction, reminded me of this pattern or this trading method. And now let's go backwards a little bit and see a few more examples, maybe some better examples. And remember, first of all, I'm talking about reversals, okay? Later on, I'll talk about continuation. Okay, so you know what, here there may be, and again, it's not well, you know what, let me look for a better pattern here. And again, I'm not talking about plain double tops or double bottoms. I'm talking about these who have second divergence or things like that. And I'm looking here on the hourly chart. I may be missing other patterns here, because I do see a lot of I do see many double tops and double bottoms. Okay, let me just take a look here. Okay, I see mainly continuation patterns here. Okay. So, okay, well, here there may be one. No, but again, I really want to show you the best ones. This one has a second divergence, but it's not the typical double top and double bottom. Okay, I'll show you. I prepared some examples earlier, but I'll on other currency pairs, so I'll find them and show them to you soon. I thought we can find something close here on the euro dollar. Okay, so let's look at the pound dollar. Okay. So here it is. Just a sec. Let's see some example here. For example, okay. Again, it's not it's not the typical example because the MACD here is a bit too far, but you can see here one low, and then again a lower low. Okay, and we have here on the lower low we have a double bottom. Okay, and this double bottom here gives you a strong divergence. You can see it on the MACD, you can see it on the stochastic, you can even see it on the RSI. Okay, and you can see how the price, after breaking this the center of the double bottom, you can see, just like I mentioned before, the double bottom may stop around the previous bottom. Okay, so just like it stopped here, I said it could happen, not always. Just like it stopped here, you can see how it stopped here. Okay, in this case, this is the lower. This is the last low. Okay, and it didn't even reach this area, and it stopped here, went down, created this double bottom, and eventually broke. And you can see that yeah, around here, more or less, this is the bottom. Yeah, and you can see here breaking or breaching, testing, and continuing. Okay, and we have here about 70 pips. So it doesn't matter if well, you can either try, if you're more aggressive, you can try to look for the price action around the bottom itself. Okay, especially when you already see the divergence, just like you can see here on the euro dollar. Okay, just like I showed you here, you can already see the divergence. Okay, how the divergence keeps developing, and here we have this double bottom. Okay, or if you want, you can always wait, especially when the trend is strong, like here you see it broke but eventually went down. You can always wait for a breaching or confirmation of the double bottom, and then when it breaches the center of the double bottom, then take long either at the close of the candle or when it retests the center line. Okay, so this is one example. Again, on different time frames, you can see many examples. This of the reversal. Of course, when it's continuation, we have many more examples, because with lower trends, with longer trends, we can see the continuation of. We can see how the how double tops or double bottoms during the trend give us many more potential moves. Okay. Okay, I'm looking for here for just an example on the 15-minute chart. Okay, here, well, these are just plain double tops and double bottoms. Okay, on the daily chart, sometimes you can see these patterns, which are very, very strong, of course. Okay, when you have double bottoms or double tops with strong candles. Here, okay, this didn't give us a double. Okay, okay, I'll soon find a few examples on the pound dollar, and let's move to a few more examples, double tops maybe. Okay, let me go for example here. Okay, and after we finish with the examples I prepared on the dollar CAD, I will show you examples of other patterns. So let's see, for example, here. Okay, we have another double bottom here. Okay, we can see the divergence, especially on the MACD. Okay, but what you can also see here is that again, it's not it's not very clear here, but you can see that although we have lower lows here, the MACD almost doesn't get any lower. Okay, it's almost the same height here. Okay, it doesn't go very high because the distance is pretty far. Okay, if the highs were closer, then we could if the lows were closer, we could see a better divergence. Okay, and okay, let me show you. It was here the example. Okay, this is a better one here. Okay, so we have here lower lows. Okay, you can see the price going down, and you can see again more or less a double bottom around here. I mentioned these wicks. Okay, so remember, sometimes it can try to breach or break a little bit, and you can see here this beautiful divergence. Okay, so first of all, there's divergence between this low here and these lows here, and in these lows here you can even see, let me just delete this. Okay, you can see here this slight divergence too. Okay, so you can see that even when we have a little bit of a lower low here, still the price goes higher here. The MACD goes higher, and the stochastic as well. Okay, so this is the reversal pattern I wanted to show you. In this case, the double bottoms. Obviously, you can find many examples like double tops. Okay, and again, maybe not with a second divergence, just plain double tops, and I'll talk about it especially when we talk about trend continuation. But if in general you see a double top or a double bottom with a divergence, it makes the reversal pattern much stronger. Okay, I was looking, and like I said, it doesn't happen a lot, but when it does happen, these patterns are very strong when you have a second divergence. Okay, so you have 1, 2, 3 lows, and you have first divergence between the two lows, the first two lows, and the second divergence between the second and the third low, or the second and the third high. Okay, but these patterns are more rare, and but when they happen, they can give you really strong moves. Okay, so this is price, or the pattern for reversal. Again, I remind you where it is. Okay, 1 low, 2, 3 lows. When the two lows are more or less the same height, and then second divergence, or the other way around. Okay, when we have one high and then a higher high, and the double top is formed by giving us the same height more or less, and we have, again, not always one divergence between the first two highs and the second divergence between the second and third high, and in this case usually you'll see stronger moves. Okay, we mentioned the channel before. Okay, I remind you, just when we started our webinar today, our session, I mentioned this channel. Now look at this action, this price action here. Okay, look at it. Look at this candle here. Okay, just like I said, we may expect some strong movement, and you see it went down a little bit and went up already almost 40 pips. Okay, so you can see, I told you, this whole area is a war zone, okay, on whether this channel will be broken or not. So again, you may expect some serious wars around here as the price maybe, I don't know, try to go higher. And I remind you, this reversal candle, potential reversal candle, the spinning top here, which is a very strong reversal candle. Okay, always when I see these candles, they give really strong moves. This is the weekly chart. Okay, the last the best example I remember for this candle on a weekly chart is, let's see here on the euro pound, on the weekly chart here. Okay, this is, I think, the best example for a spinning top as reversal candle. You can see the strong move, a reversal candle, and a weekly candle of more than, well, if I take it week to week, it's about 800 pips on the euro pound. Okay, 800 pips. So be aware of these candles. Okay, they are very, very strong. Okay, so this was the first pattern I showed you, or these patterns are for reversal. Obviously, like I mentioned before, you don't have to see two divergences. Okay, you can always just see a double top and a double bottom with a regular divergence, with just one divergence. And for example here, I don't know, okay, you have a double bottom here, around here you can see even small wicks, and you have, for example, here a double bottom, we have this divergence between these two bottoms, we have this divergence. Okay, we have the divergence on the RSI. So be aware of these reversal patterns, especially with divergences. When we talk about continuation, on the other hand, okay, with continuation the patterns are much stronger. Okay, they're more frequent, and you may or may not see divergences, but with these patterns, seems like, yeah, you say, Vasily, that the euro dollar may go up for a correction or after correction. Yeah, maybe. Again, maybe we'll yeah, we'll have to see, wait and see whether this strong move upwards will indeed give us further moves up, or it's just maybe a small reaction of the for the channel before continuing downwards. I don't know. I mean, it went up so many times, for 50, even 100 pips, and eventually it dropped much more. So this trend, even you see here an upward move of 60 pips, and here about 70 pips, and no matter how much it moved, eventually it went down again. Okay, trend continuation, and I think this is what you should look for most of the time, not reversal, because again it's much stronger. With trend continuation, you have to, if you want to look at these double tops and double bottoms for a continuation, just look for, it's actually looking for support and resistance areas, okay, in order to join the trend. Now, I usually see them on shorter time frames, okay, mainly with along with moving averages, but you don't have to have any moving averages, and you don't have to even look at divergences. You can just look for these continuations as long as you know the general trend. Okay, for example, when you see this, okay, you see a double bottom here, a double top, okay, you see this a reaction candle to this top, you know it's a downtrend, okay? And no matter where you take it around here, you can take several pips here. It's at night; it doesn't give you much, okay? Here we can see a triple top, okay? Well, it's not a top; it's more of a descending trend line, but it's almost like a triple top. You can see here with this resistance line. Okay, so it reacted 1, 2, 3 times, and you can see the strong move. But let's look at the classic double tops and double bottoms for continuation with reversals. Okay, with divergences. And for this, I will take the stochastic because I told you it's usually faster. Okay, for example, okay, we have this divergence we have this double top here, or this resistance area around here. We have the price going up, down, up again, reacting to the same resistance level, and divergence. We know the general trend is a downtrend. Okay, you can always add these trend lines. You can see that the price also reaches the trend line. So you have sort of a double top, you have a trend line, you have this divergence, and you're with the trend. So taking short is a classic trade here. Okay. Another area of potential double top, for example, and again, when I say double top, it's not really a double top, because a double top comes after the price goes up. Okay, it's a reversal pattern, but I'm talking here about continuation, so it's more of reaching the resistance level again with divergence, more or less. Okay, so you can see here, although this is not the classic example, but you can see here the price reaching this resistance area, and the stochastic already crossing down again, this reversal candle, and the price moves down. Here again, a classic okay, this is a classic area, okay, of reversal. And here we actually have, you know what, I'll put this, we actually have the other divergence. Okay, I mentioned it in previous seminars. You can see here we have one high retracement, another high which is not higher, but the stochastic is already moving higher. Okay, going up and moving higher to the overbought zone. This, I remind you, is the hidden divergence. In this case, the hidden bearish divergence. Why is it bearish? Not because, I mean, the stochastic is going upwards. Okay, it's in the overbought zone. So why is it bearish? Because it gives us in this case a continuation signal for short. Why? Because we reached the same height. Okay, we can see it many times with double tops. You may see either a regular bearish divergence, just like here. This is a regular bearish divergence. Let me remove these. This is a classic bearish divergence. High retracement, another high, the same height, and the indicator gives us a divergence. Okay. In this case, a classic bearish divergence. But sometimes, just like I showed you now, sometimes the divergence is the other way around. Although this high, the second high, is not higher, the oscillator gives us a higher high in the overbought zone. Okay, and this is usually during a downtrend. Okay, when we have a general downtrend. And the overbought zone here, when the oscillator shows us an overbought zone, it means usually that the price has reached some resistance, and before continuing the general trend, which is a downtrend in this case. Okay, so we have an overbought you can see many times when the stochastic on this downtrend, or in this case it's moving sideways, but you can see that when it reached the overbought zone, it kept going down. Okay, so we have in this case a double top with a divergence and again going down. In trend continuation, your risk is much lower. Okay, much lower. So look for these patterns. Again, as long as you're confident with the trend, okay, your risk is much lower. Okay, in all time frames, it doesn't matter. It can be on the 5-minute or 15-minute or 1 hour or 4 hours. When you have the general trend going down, okay, you have some movement, and you see strong price actions. Okay, strong price actions. In this case, you have support, broken, resistance, resistance again, and trend continuation. Okay, be aware of these what I call double tops and double bottoms. Okay, although they're not really tops and bottoms, they're just more like price actions to previous support or resistance. And of course, divergences may help you when you see them. Okay, you don't always see them. For example, here it's hard to see a divergence on the MACD because it's still below zero. We don't have any peaks here on the MACD. On the stochastic, we have some divergence between these two small peaks. Okay, not between the farther peaks. Okay, we have some slight divergence, but it's not much. Okay, let's look for an uptrend, a real uptrend. You know what? Even on the hourly chart. Okay, for example, here. Okay, for example, here you see we have a general uptrend. You see this reaction here to this resistance, which now is support, and again support. We don't have any special divergence. We don't have the classic divergence, but we do have, as you can see, we do have a hidden divergence. Okay, the price here doesn't set a lower low relatively to any of these lows. Okay, but here it did set a lower low. Okay, you can see here that it reached the oversold zone and then continued upwards. In this case, a very strong move of 150 pips with a gap. So so you can see here how hidden divergences can help you with trend continuation. Okay. On this case, on the other hand, we have trend reversal, and you can see here a double bottom, and we can see this strong divergence here. Okay, so like I say, always be aware of these patterns. If you trade, if you scalp, for example, okay, and you take short moves, then noticing you know, reversals and divergences may help you to avoid entering in, you know, in to short trades in the wrong places. Okay, for example, entering short here when you see some potential divergence is not a good idea, especially when you see the strong price action. Okay. On the other hand, joining a downtrend, for example, around here, okay, you know what? There is, although there is a hidden divergence here, I want to take a better example of joining the trend. Okay, for example, around here. Okay, what we mentioned before, we have strong price action. You can see these strong wicks here, 1, 2. Okay, reversal. You can see between, although these two peaks are well, you know what? Maybe Now this is not a real divergence. Here there is a potential better divergence. Okay, again for trend continuation. Just a sec. Here. Okay, all this area here. You can see this, and the MACD is going lower. Okay, I mean, and I'm talking about trend continuation in these cases just because it's much stronger. Okay, your risk is much lower when you know that the general trend is when you go with the general trend, it's in your favor. This is it basically. In the next webinars, I'll show you some when I see live examples of the first pattern. Okay, with two divergences, I'll give you these examples on real charts. Okay, and again, I don't see these very often, but when I do see them, okay, they're much stronger. Okay, or they give strong moves. Here again, just a small example. Lower low, and then more or less, okay, again more or less the same low, or pretty much a double bottom. And here we have first divergence and second divergence. Okay, you can see it's almost the same height, but the MACD is already much higher, and you see the strong move afterwards. Okay, so this is a nice reversal pattern. And on the other hand, when you look for a continuation, okay, we can always, in this case, let's look for here, for example, there may be on the shorter time frame this continuation pattern. Okay, here. So, for example, we have here a sharp drop. We have here the same height, more or less. And well, in this case, there isn't even there's no almost no divergence. Now the stochastic here, because this is a very short move, it didn't give us the expected divergence. And you should train your eye, of course. You should practice and train your eye to see these patterns. Okay, the more you look for them, the more you'll be able to identify them in real time and use them. Okay. Okay, this is a plain double bottom. Okay, I'll show you a few more examples. This is a nice trend continuation. Okay, here a double top with this divergence here. So we'll see more of these in the next webinars. Again, I wanted to show you that already when I saw this pattern on Friday on the euro dollar with a strong price reaction. Okay, on the 4-hour chart in this case. So remember, be aware of these. Okay, when you see the price going down and then stopping in a double bottom area, especially if you see divergences, be aware. If you see the price going up, okay, if you see the price going up and then stopping in a double top formation, and obviously you'll see divergences in all these patterns, at least one divergence, if not two. Okay, so you can see here divergence on the MACD, for example. Be aware of these reversal patterns. Okay, when there's a strong move and then a double top or a double bottom, it means potential reversal. Look for the divergence, look for the hesitation candles, look for the place where to either close your previous trade or even to look or to go in the opposite direction if you're more aggressive. This is it for today. Again, this is not a very or highly sophisticated trading strategy. It's more of a price action and pattern recognition. We'll see tomorrow or on Wednesday. We'll see some some other trading strategies with with maybe the indicators you like, with all the colors and different magic lines and things like that. For today, I wish you good luck with your trading for today, for this week, and I'll be more than happy to see you again in the next webinar tomorrow and on Wednesday. So thank you very much for attending, for listening, and good luck. Goodbye. Thank you very much. Thank you.